Welcome to the Deep Dive. We've got quite a stack of material here today, and we're digging into something always worth watching, the housing market.
Yeah.
Specifically, Florida. What's going on down there as we look towards 2025? I mean, for ages, the story's been nonstop growth, right? Sunshine, boom times.
Oh, yeah, that's been the narrative. Prices just going up and up, attracting tons of buyers, investors, the whole 9 yards.
Exactly.
Yeah.
But the stuff we've been looking through for this deep dive, it suggests things are maybe a bit more complicated now, especially in certain cities.
Right. It's not quite so uniform across the state anymore.
So our goal here, really, is to unpack what this info tells us. What are the signals? What are the trends in these specific Florida cities? We basically looked at two different sets of material here.
Yeah. One gives that kind of broad state-level view on affordability. The other one zooms right in, in individual towns and cities, highlighting some pretty significant shifts.
Okay, good. Let's set the stage then. That broad context piece, the one looking at U.S. housing affordability state by state for 2024. Start there.
Sounds good. So this material uses a score, basically, to see how affordable homes ought to buy. It compares median home prices to median incomes.
And the scale.
It runs 0 to 2. And the key thing, anything under 1 means it's less affordable than the average.
Right. So where does Florida fit in? What's its score?
Okay, so this source puts Florida at a 0.52 for 2024.
0.52.
Yeah.
Okay, so definitely below 1, meaning, yeah, less affordable than the U.S. average, according to this measure.
Exactly, below the national average.
Huh.
But, context is important here. In this particular data set, it wasn't like the absolute least affordable state shown.
Okay.
Places like Montana, California, they scored even lower. So yeah, Florida's less affordable than average, but maybe not rock bottom compared to everywhere else in this specific picture. Gives us one perspective.
Got it. A statewide baseline,
Yeah.
less affordable than average.
Yeah.
But now,
Hmm.
let's switch gears. Let's get into that other material we looked at. Because this one really hones in on specific cities, and, well, it starts flashing some pretty serious warning signs for 2025.
Yeah, what's really striking is how consistently this other source points to these pressures, these warning signs cropping up in city after city down there.
It suggests things on the ground might be pretty different from that overall state picture, at least different from the boom years.
Absolutely. And you see these common threads, these sort of recurring issues popping up again and again in different locations.
So what's the biggest one? What jumps out first?
Well, probably the most consistent warning sign mentioned is falling prices. And, the worry that brings about homeowner equity.
Falling prices after years of increase. Okay, give us the specifics. What kind of drops are we talking about here?
The numbers cited are pretty eye-opening. Port Charlotte, for example, it mentions a 14.2% plunge in the median price.
Wow.
Yeah, dropping from a peak around $333,000 in 2022 down to about $285,700 in 2025. And it notes this could be stirring up, early signs of a negative equity crisis there.
Okay, negative equity crisis. Just unpack that quickly. That means...
It basically means you owe more on your mortgage than your house is actually worth on the market right now.
Right. You're underwater.
Exactly. If prices drop fast, especially if you bought recently, maybe didn't put a huge amount down, suddenly you owe, say, $300K on a house now valued at $280K.
Which traps you. You can't sell without losing money, can't easily refi.
Precisely. It's a really tough situation. And Port Charlotte isn't alone in this, according to the material.
Doesn't sound like it.
No, far from it. Cape Coral's another one highlighted, almost a 15% drop there. Median price falling from about $425,000 down to $361,000 or so. That's like a $63,000 slide.
63 grand. Ouch.
And Northport, similar story, about 15.3% less, dropped from around $379K to $321K. That's roughly $58,000 gone from the median value. Deltona, about 12.2% down, from $340K to just under $299K, a $41,500 loss.
And we're not just talking about smaller places, are we? This is hitting bigger areas, too.
Seems so. Ocala saw almost 9% off its peak, down to about $255,500 from $280K. That's a $24,500 dip. Winter Haven, roughly 8.2% decline. $300K down to $275,500, another $25K drop.
Okay. And Tampa, a major city.
Right. It mentions over a $23,000 dip there, from about $383K down to $360K.
So the takeaway here is clear. In numerous Florida markets, prices aren't just stalling, they're actively falling, erasing recent gains.
That's definitely the signal coming from this material. Significant pullbacks impacting homeowner equity, a major shift in momentum for these specific spots.
Okay, now this connects to something else the material really hammers home, doesn't it? If prices are falling, Homes are also taking much, much longer to sell,
Exactly. It gets really interesting here. This days on market, or DOM metric, is shooting up.
which tells you what? About supply and demand.
It's classic cooling market behavior. Fewer buyers, or maybe more cautious buyers, compared to the number of homes listed. So yeah, properties just sit.
And the numbers cited for this DOM increase, they sound pretty dramatic.
They really are. Let's see, Port Charlotte again. Homes that apparently used to fly off the market in a week, now lingering 90 days, maybe more.
90 days plus from a week.
Yeah. Northport, similar thing. DOM nearly tripled since 2022, also over 90 days now. Palm Bay jumped from just 30 days back in 2022 to over 85 days.
Months, not days. That's a fundamental shift for sellers.
Absolutely. Port St. Lucie went from 24 days to over 65 days. Poinciana, as mentioned, is taking 70-plus days. Deltona doubled its DOM from 30 days to over 75. Ocala, the average, is sitting at 80-plus days and apparently still climbing.
And Tampa, even a big metro like Tampa.
Yep. Tampa went from homes selling in under 2 weeks, reportedly, to now sitting for 75, even 90 days.
Wow. And is this linked to just too much inventory building up?
That seems to be a big part of it. The material talks about exploding housing inventory in places like Cape Coral and Tampa.
And new construction.
Yes, it specifically calls out a glut in new developments in Winter Haven, mentioning vacant homes sitting there. It suggests builders might have gotten ahead of themselves during the boom.
So are builders pulling back now?
That's what the material indicates. It mentions builder overestimation and even canceled projects in several of these cities. Port Charlotte, Cape Coral, Northport, Ocala, Winter Haven.
Makes sense if homes aren't selling.
Right. Builders see homes sitting unsold for months. They get spooked. They slow down or stop building. It's a direct response to weakening demand meeting rising supply.
Okay, so if we tie this together, prices are falling, homes are sitting unsold for way longer.
Yeah.
But there's another piece here, right? The cost of just owning the home is going up.
Yes, and this might be one of the most critical points raised in the material. Even if purchase prices dip, the actual cost of ownership is soaring, making things less feasible.
And the big driver there is insurance.
Insurance premiums. Yeah, the material describes dramatic spikes, doubling, even tripling in some cases, reportedly.
Doubling or tripling? What kind of numbers are we talking?
The ranges cited are pretty staggering, like $7,000 to over $9,000 a year in Port Charlotte, $6,000 to $10,000 annually in Cape Coral, over $6,000 a year in Deltona, $5,500 to $6,000 annually in Ocala.
Wait, up to $10,000 a year? Just for homeowners insurance?
That's what's noted in the material for some areas. It completely changes the monthly payment calculation for homeowners.
I'll say, that's huge.
And get this, the material even points to situations where the insurance payment alone is reported to be higher than the mortgage principal and interest.
Seriously?
Wait.
More than the actual mortgage payment?
It's a wild detail, but it's in there. For Poinciana, it mentions insurance costs of $500 to $800 a month, reportedly exceeding the mortgage payment itself. Winter Haven, similar note, $600 to $800 a month just for insurance. Again, potentially more than the P&I portion for some.
Wow. Okay. That's a massive burden. Anything else adding to ownership costs?
The material also flags rising HOA fees. It cites Port St. Lucie seeing jumps from maybe $80 a month to over $200 in some communities.
Yep.
And Poinciana, again, mentions special assessments hitting homeowners. These are like unexpected big bills from the HOA, often for things like storm damage repairs costing thousands.
Okay, so let's connect the dots here. Prices falling, home sitting, ownership costs soaring. What does this do to demand? To buyer interest?
Yeah, according to the material, it leads to a significant slowdown, maybe even a collapse in demand in these specific markets.
Why? What are the reasons cited?
Higher mortgage rates are a big one, obviously. Rates around 7.5% are mentioned for Tampa, which just prices a lot of people out or shrinks their budget considerably.
Makes sense.
Plus, it seems fewer people are relocating to these specific areas compared to that big surge we saw during the pandemic years.
And actually getting a loan approved, is that getting harder too?
That's another major hurdle highlighted. Lenders are reportedly tightening their belts in places like Northport and Palm Bay.
Meaning
They're asking for higher down payments, stricter credit scores. So yeah, lots of potential buyers are just hitting a wall. Either they can't afford it or they get rejected for the loan. Tampa and Winter Haven are mentioned in this context.
which loops right back to why homes are sitting longer and why deals might be falling apart before closing.
Exactly. The material points to a real collapse in pending sales deals that were agreed upon but didn't make it to closing.
How bad is it?
Pretty bad in some spots mentioned. Northport, over 30% of pending deals reportedly fell through last quarter. Port St. Lucie, nearly 1 in 3. Deltona, 1 in 4, failing in Q1 2025. Tampa saw pending sales drop 28% in Q1 2025.
And why are they collapsing?
The reasons cited are pretty much what you'd expect. Financing problems are huge, low appraisals become an issue when prices are falling, and sometimes buyers just get nervous and back out cold feet.
Okay, and who's adding to the supply side pressure? Is it just builders?
Not entirely. The material also points to investors heading for the exits in places like Cape Coral, Deltona, and Tampa. Cashing out, maybe? And it also mentions Airbnb owners selling off properties in Palm Bay, Tampa, Winter Haven. Could be new regulations making it tougher, or maybe the market's just oversaturated for short-term rentals there now. Either way, it adds more houses for sale.
Right. More supply hitting a market with weaker demand. And didn't Palm Bay have that interesting price-to-rent thing?
Yeah, that's another signal mentioned. Rent in Palm Bay is noted around $1,700 a month, but home prices are still well over $300K.
So renting is just way cheaper.
Significantly cheaper than owning once you factor in mortgage, insurance, taxes, all that. When that happens, it makes buying much less attractive financially for a lot of people, further dampening demand.
Okay, so cost, supply, demand. Are there any other sort of contributing factors mentioned in the material that are adding to these shifts?
Yeah, a couple of other things pop up. Foreclosures, for one. Northport is cited as seeing a spike, like over 60% year over year. That indicates financial distress and, again, adds inventory.
Okay, and what about people moving?
That's the other point. Population changes. The material actually notes a population decline or a net outflow of people in several of these same cities we've been talking about. Port Charlotte, Deltona, Point Siena, Winter Haven.
People are leaving.
The reasons often cited are the unaffordable costs, especially that soaring insurance we discussed. When people leave, it shrinks the local buyer pool even further. It all feeds into that weakening demand picture.
Wow. Okay, let's try to synthesize this. We've dug through material showing some really big and frankly challenging shifts in specific Florida housing markets looking towards 2025.
Yeah.
The signals seem pretty clear and consistent across these areas.
Yeah.
You've got falling prices hitting equity, homes taking way longer to sell because inventory is piling up, these crippling ownership costs, especially insurance,
Right.
which leads to less buyer demand, financing getting tougher, deals collapsing, investors selling off, and even people moving out of some of these areas because it's just too expensive.
It's fascinating and a bit sobering how all these factors seem to be converging in these particular locations at the same time. And like we said, this isn't necessarily the story for the entire state. Remember, that affordability score, Florida overall was less affordable than average, but maybe not in crisis statewide, according to that data. But this other material clearly shows these pockets, these specific cities, are facing some serious headwinds right now. Rapid changes happening on the ground level.
So connecting this back to you, the listener, understanding these kinds of specific local dynamics and warning signs, it's really crucial, isn't it?
Absolutely.
It helps you think more critically about any real estate market, honestly. Whether you're interested in Florida specifically or just want to grasp how economic factors, local costs, insurance crises, demand, shifts, how they all interact to shape housing.
Yeah, it shows that even in places that seem super desirable on the surface, things can change fast. Market conditions aren't set in stone. They react to cost, demand, supply imbalances.
Really highlights why you need to look past broad headlines. You got to dig into the local details.
Couldn't agree more.
So wrapping up, what does this all really mean? We've done this deep dive into material that paints a picture of significant challenges, real warning signs in certain Florida housing markets for 2025. Price drops, slow sales, soaring costs.
Yeah, and it leaves you with a big question, doesn't it? Based on all these signals presented here, the price corrections, the DOM climbing, that huge insurance burden, demand falling off, are these just localized corrections? Maybe necessary adjustments after a huge, perhaps unsustainable boom? Or are these signals, especially things like the insurance crisis maybe, indicators of a more fundamental, longer-term shift? Something changing more broadly about the appeal or feasibility of living in certain parts of the Sunshine State. It's definitely something for you to think about as you watch market signals wherever you happen to be.
That's a great final thought. Really appreciate you digging into this with me, and thanks to all of you for joining us for this deep dive.